Hey everyone, happy Tuesday! It's my favorite day of the week, and hopefully it has become your favorite day of the week, because that's right, I'm back for Mortgage Tip Tuesday, another tip with It's Your Girl, hashtag JLoan in the building. Hey, I hope you guys are having a fantastic week. I am enjoying the weather. I was in Minnesota this past weekend, and that is a whole nother type of cold that I do not like. I'm telling you, you cannot take a Miami girl and put her in cold weather. It doesn't matter how long I've lived here. My body just loves heat, sunshine, and white beaches, okay? So I wanted to talk to you a little bit about what's been going on and the type of phone calls that I'm getting. And of course, I always make these videos based on conversations that I'm having with clients. So more today than ever, because of all the equity and the housing values going on, customers are realizing that, hey, I got a ton of equity in my home and I want to know, what can I do with this equity? Should I consolidate debt? What should I do with this equity? And basically what's been going on is I've had, of course, because of inflation, a lot of clients are in debt. And so they have this equity in this home and they want to know, hey, should I refinance my home or should I get a HELOC, which is a home equity line of credit? So today, I wanted to talk about the differences between a cash out refinance, which I'll refer to as a CO, and a HELOC, which is a home equity line of credit, but I'm not gonna write that this whole video, so I'm just gonna be writing HELOC. But again, that's a home equity line of credit, and we'll discuss that in a minute. So number one, on a cash out, we will refinance your current first mortgage, and we're going to provide you a lump sum cash at funding, and this is a one-time transaction. So what this means is, if you currently have a first mortgage that you're paying on currently with Union Home Mortgage, we will take that complete mortgage and you are subject to today's interest rates, and we will cash out some or all of the equity that you have, and I'll talk about your maxes down here, and we will give you a lump sum of cash at closing. This is a one-time transaction, meaning that once you do it, we're not going to continuously give you cash out of that. We give it to you, and then it's up to you to do whatever it is that you decide to do with that cash, okay? Number two, on a cash out, this is mostly on a fixed rate and set term. So again, I say mostly because it's really up to you whether you decide you want a fixed or a variable rate. But in this market, I don't see many people doing variable rates because rates are just not consistent and they're all over the place, and they've been going kind of like this, right? So more people are just not feeling confident with a variable. But that is a plus of refinancing your first, is that it's on a fixed rate and it's on a set term, whether that be 10 years, 15 years, 20, 25, or 30, or you can keep it at your current term that you have now. So if you have 17 years left, we can do a 17-year mortgage for you, and that payment is set based on that, okay? On a HELOC, which again is a home equity line of credit, this really creates a second lien on your home. So what's important is that you'll continue to pay your first mortgage with Union Home Mortgage, and you will create a second lien, which means now you're making two payments, okay? So that's important to know, that you're creating another mortgage or another lien against your home. And on a HELOC, this is like having a credit card on your home, but the line is against your home equity. And the reason I say that is because with a HELOC, they open up a line, kind of like a credit card will say, hey, you've been approved for $20,000. So on your home equity line of credit, they can say, hey, you now have a line of $100,000 and you can use this as you choose. So if you want to go on vacation or pay down debt or remodel your home or pay your pay your children's college, you can take out money and then you can kind of pay it back as it goes. And this line typically stays open for 10 years. So it does keep you from having to constantly refinance, but there's a but. This HELOC is on a variable rate loan, okay? So it's on a variable rate loan, but typically during that draw period, and I'm just saying typically because there are tons of lenders out there and tons of guidelines just based on the ones that I know of. They're variable rate, but during that draw period, so during that 10-year draw period, it's typically interest only. So you can make more than the interest payment, but most of the time it's interest only. So this may be beneficial for you, or you may not like this option. I'm just trying to tell you what the big differences are between the two to help you when you're deciding, should I refinance my first mortgage? I do urge you to explore both options to see what is best for your budget, because when you talk about variable interest rates, there's no certainty of what that payment will be. Okay, so we got to keep that in mind. But being that it's interest only, that could, potentially give you a lower payment. But again, we refinanced a ton of people in 2020, 2021 with super low interest rates, and you may not want to touch that. Have I refinanced people out of those loans and given them a fixed rate and consolidate debt, and it made sense? Absolutely. But I don't know what works for you, what makes your heart happy, and what makes your family budget happy as well. So again, this is just the information to provide to you. Okay? Now, both of these loans, whether you do a cash out refinance or whether you do a home equity line of credit, they're both capped at 80% loan to value. So you cannot max out your value and get all of that cash. Guidelines don't allow you to take 100% of your home value. So they cap that at 80%. So I'm a visual person and I always want to give you numbers. So if your home is worth $400,000, the max total loan amount that you're allowed is $320,000. That can be in the one loan or both combined, okay? And what I mean by that is, hey, if we refinance you and you want the max that you can get at 80%, your loan amount would be $320,000, and we'll pay off your first, and then the rest of it you can get. If you do it on a second lien, and let's just say you owe $200,000, but the max you can do is $320,000, then the line that's open cannot exceed $120,000. Now, of course, if you want to know your estimated value, you can reach out to me. I have sources. We also have systems here at Union Home Mortgage that can help look up your value and just give you at least a close estimate. We're not appraisers, but we do use systems that help us with automated values. So if you want to know and you're interested in consolidating some debt, maybe doing some home projects around the home to upgrade, since a lot of us are now working from home. I'm not, but I can. But if you're working around your home and you're like, you know what? I freaking hate that wall and I want to change the color and I need money. Whatever it is that you want to do, it's your business. I'm just here to provide you with the information that you need to help you make the best decision when it comes to doing your mortgage. So until next week, it is always such a great pleasure coming to you with these videos and providing value and information and education. If you know someone or yourself that is looking to purchase, that is looking to refinance, that is looking to build a new home, please don't forget to send them to me and let me help them. My direct number is 817-601-5456. It's your girl JLoan, and I want you to have a fantastic rest of your week. Stay safe and stay blessed. Until next Tuesday. Bye-bye.